This is MacroVoices, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
Now let's get to that chart deck. Listeners, you're going to find the download link for the post-game chart deck in your Research Roundup email. If you don't have a Research Roundup email, it means you have not yet registered at macrovoices.com. Just go to our homepage, macrovoices.com, and click on the red button over Anas's picture saying, looking for the downloads. Now, we will get to the topic of leveraging your gains on the next commodity bull market, but let's first do a quick review of the oil markets. Eric, what's on your mind?
EIA inventory was delayed by the holiday this week, so I don't have any inventory stats to share with you. And as I'm recording before the open on Thursday, we're back below $70 on WTI again. Boy, what a roller coaster. I'm flat crude oil and continue to feel that the market isn't really offering any great directional opportunities. Go long here, too much interim risk of bigger drawdown. We don't know how much lower this market can go. We don't know what OPEC Plus is going to do next in terms of increasing production, how much, by when, etc. Go short this market in this geopolitical environment? Are you crazy? No way. Options, vol's too expensive. So I don't see the directional trade. Term structure is not behaving as I normally expect it to, so I don't see a trade here.
Yeah, Eric, geopolitical headlines continue to stir massive volatility in the markets. So now we had a very fast 50% retrace of the prior sell-off from the summer, but quickly we find ourselves approaching the bottom end of the range again on geopolitical headlines. The big question for me, will we see a similar situation like we saw in December and January, where even though the oil markets go to the bottom end of their ranges, they stop making lower lows. As we approach the 70 level, I think it continues to be a very interesting pivot. If we just continue to see even the entire month just be consolidation in the low 70s as we get into the elections, it could become a basing formation that establishes the lows, but it probably will be a meat grinder for the next little bit.
Okay, Patrick, I know you've been looking closely at commodities, and I very much hold the view that we are in a new commodity supercycle. Ola Hansen on the podcast has echoed that same view. I know that you've had some insights on how investors might actually be leaving money on the table in this commodity bull market. Can you walk us through what's on your mind, what you're seeing, and what your strategy is all about?
Eric, commodity markets are truly the epitome of boom-bust cyclicality. We've all seen examples of commodity stocks that plummet, losing over 80% of their value, only to soar by hundreds, if not thousands of percent in the subsequent booms. Any long-term veteran of commodity investing can attest to this. There's a very well-known adage that bear markets are the authors of bull markets and bull markets are the authors of bear markets. I believe we're nearing the end of the recent commodity bear market. And if you look at the chart on page 3 of the Bloomberg Commodity Index, you'll see that the bull market from 2020 to 2021 has been followed by the 2022 to present bear market consolidation. While some commodities like gold, uranium, coffee, and orange juice have shown strength, the majority have struggled over the past few years. For listeners who subscribe to the secular bull market thesis in commodities, these kinds of bear markets offer tremendous long-term opportunities. At Big Picture, we're all about finding convexity to capitalize on these deeply volatile boom-bust cycles. And we believe the next big opportunity is just around the corner. And that's why we're hosting a special webinar to help listeners understand how to maximize their gains in the next commodity bull market.
Okay, Patrick, back at the start of this year, you did a very similar webinar, which was titled Unlocking Profits in the Coming Gold Bull Market. Needless to say, you nailed the call on the gold bull market. There's a lot of us that are very happy about that. But you had some very specific trades on that were a little more complex than just, going long gold. How's that faring this year?
Well, Eric, we actually hosted a very similar webinar at the start of the year because we believe the next leg of the gold bull market was beginning. During that session, we highlighted several trades in gold and gold miners, which have gone on to deliver extraordinary gains. In the upcoming webinar, we'll be showcasing those live account trades, many of which are still in place today. While the returns have been impressive, what we believe stands out the most is the asymmetry of the execution. It's not just about the gains. The management of the risk was what has allowed us to position ourselves with such conviction. This is a concept that needs more than just a quick conversation to fully explain, which is why we're holding this special webinar to be able to visually share these insights. We've been using this system successfully for half a decade now, and we feel it presents an extraordinary opportunity, particularly given where many commodity stocks are trading today.
Patrick, is this special webinar free, and where do people register?
The special webinar will be on Thursday, October 24th at 4 p.m. Eastern Standard Time. It's completely free to attend, and you can register right on the homepage of bigpicturetrading.com. Okay, Eric, what are your thoughts here on equities?
Patrick, no surprise in my mind that this melt-up has continued. That's what I was expecting. I think it's political and election-related. It'll be interesting to see what happens after the election. And don't forget, a lot can happen in these last few weeks, both before the election and even after the election, before Inauguration Day. Another attempt on President Trump's life, quite frankly, is more likely than not, in my not-so-humble opinion. Anything is possible here, and we don't know how people are going to react. The last time Donald Trump was elected president, there was quite a bit of civil unrest, and people were upset and protesting and so forth. If he is reelected, it's likely that there will be more of that. A lot of finger-pointing, blaming, civil unrest, violence. How is that going to affect markets? It's going to be very interesting. If Vice President Harris is elected, that's going to create its own set of issues and concerns. And if we get a hung situation, a contested election, which frankly I think is pretty likely this particular year, that just brings more uncertainty and more excitement and fireworks to the market. So let's see what happens.
Yeah, Eric, I think that the big driver of equities from this point forward is all going to be about how the earnings come in the next 2 weeks. With the market up around the 5,900 level, of course, a stab to the round number of 6,000 is always something markets naturally gravitate to. But the bigger question is that will the earnings guidance suggest that markets can justify these valuations, or would it spur a catalyst for potentially creating a mean reverting correction? The 50-day moving average is around 5,700, where all of the highs from the summer came in. And so that would be a very logical place for a correction to occur if we find that the earnings drive some sort of profit-taking cycle. On page 5, I have that dollar index. What are your thoughts here?
Well, just as we predicted here on MacroVoices, this dollar rally has been brisk for the last few weeks. We've already cleared 103. 104 is the next obvious resistance level, and that's a major level on the Dixie in terms of where we've seen pivots in the past. So it's going to be very important to see what happens if we get to 104 and whether we get above it.
Eric, the U.S. dollar remains in the dead center of its one-year trade range around this 103 level, and it lacks a catalyst for a big move. I think for the dollar to have any real meaningful follow-through further to the upside, we'd have to really start seeing some sort of drivers of a risk-off impulse, which at least have not emerged yet. So expecting the dollar here to consolidate in this 103, 104 area into the elections is certainly the most probable outcome. All right, let's touch on gold.
No surprise in my mind that the correction, if you want to even call it a correction, didn't cost us much in terms of downside on price, but burning off the overbought technicals, getting us from an overbought condition back into an oversold condition, at least temporarily, not oversold anymore. That's basically cleared the way for the next leg higher, set that stage, and already we see that the next leg higher appears to be underway.
Yeah, Eric, the gold bulls bought the dip very quickly. We continue to have the pattern of higher highs, higher lows. All the ascending trend lines continue to be in place. Above all of its moving averages, price action continues to be very cumulative. Everything is positive. Now, we are at a previous high. There's always a possibility of a double top, and it rejects at this level, but there's no technical evidence that that's the case. The measured move on the upside is up to 2,800. So let's see whether the bulls can follow this through and put on another $100 on the upside. Finally, Eric, I wanted to touch on uranium, which certainly has been showing a little bit of life over the last couple months. What are your thoughts here?
Well, needless to say, if there was still any question at all on Tuesday afternoon as to whether or not the bottom was in for uranium, I think that doubt was pretty much eliminated by Wednesday afternoon. So what's driving the massive upside in uranium stocks this week? I think it's all about not just one or two, but basically all of the big tech companies going all in on nuclear. Google's announcement to buy 7 small reactors from Kairos Energy was probably the biggest catalyst that really rocked the market this week. And I think it's important, even as a person, I've been just such a big proponent of small modular reactors and advanced nuclear and so forth. I'm delighted to see Google investing in the right advanced kinds of nuclear energy and not just trying to build more AP1000s the way a lot of people are doing. So kudos to Google for focusing on the right stuff. But let's keep this in context, folks. Kairos is basically a startup company that doesn't have a reactor. They have a design. They're working on a prototype. All of the SMR companies that are doing deals now, amazingly, with these big tech companies, don't actually, they've never built an SMR yet. They don't have any. They don't exist. They're on paper. They're going to build them. We're at a very important turning point. But let's not interpret this as Google just agreed to buy something off the shelf. Google agreed to buy something that doesn't even exist yet, which is a very, very strong, bullish, long-term signal in terms of where this market is headed. But let's just keep it in context. We're not creating a whole bunch of new uranium demand as a result of Google buying something that doesn't exist. What we're seeing is something much, much more important than uranium demand. We're seeing investor sentiment finally turn around and wake up to the rather obvious fact that we've been pounding the table about here on MacroVoices for months and months now, which is that the nuclear renaissance is on, and it's on strong. Kudos to our friends over at Uranium Insider. Justin Hune absolutely just nailed calling this bottom. He did a special video on the day of the bottom from, what a guy, dialing in after the conference in London late at night from his hotel room to do an emergency video for listeners saying, guys, right here, right now, this is it. Don't miss this. And then the following week saying, if you missed it, don't wait any longer. This is it. The bottom's in. Justin just nailed that call. So good job, guys. Thanks very much. And I'm very much enjoying the newsletter.
Yeah, what is particularly interesting is how uranium companies such as Cameco continue to rip back towards their year highs, as there's certainly some aggressive accumulation occurring back again in this uranium space.
Folks, just a reminder to attend Patrick's free webinar on why commodity investors might be leaving money on the table. It's October 24th at 4 p.m. Eastern Time, and you can register at bigpicturetrading.com.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at macrovoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week, free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit MacroVoices.com.